Hi, folks. I'm Will Bridges from your team here at Trade House Funds, and we've got one for you today. It's starting to look like the US dollar is the market juggernaut, and I'll get into why and how that might affect a lot of different instruments like the SPX. If you trade gold, silver, oil, anything, you're going to want to pay attention. We're going to do some live market analysis right now as well. We're going to look at the economic calendar to talk about what's coming down the pipe. We've got various interest rate decisions coming next week. We have all the billionaires in the world meeting this week in Davos, Switzerland for the World Economic Forum. So tons of action to speak of right now. Not so much on the charts this week, but that usually means lightning in a bottle is soon to be released. And we are hoping for a little bit of opportunity to come here next week. So we are looking at some pretty big movement that could be happening, and it should happen quick. So if you like trading news and you like live analysis, trade ideas, all this stuff on the free, on the cheapy, whatever you want to call it. We're going to give some expert analysis in here, and we're going to look at every major macroeconomic instrument that you know about. Indices, commodities, currencies, you name it, we're on it. Like, subscribe, ring the bell, and we'll see you in the next one too. So there is no such thing as a guaranteed trade or investment. Everything here will be for education purposes only. So you got to risk it to get the biscuit. I trade with a stop loss, and I suggest you probably should do that as well. Let's keep moving. Let's get this show on the road. I want to get over to the economic calendar. This is last week. And a highlight from last week, I would say, is, really the Swiss foreign assets, under mentioned here, are continuing to fall. So I think that is causing more dollars to be in circulation. The Fed can keep rates high and quote unquote print by taking parked funds out of the Swiss banks and putting them into circulation by just putting them back into dollars. And I think that should be something that might continue for a lot longer. It's already moved to the tune of 300 billion in foreign assets in the last, since January of 2022. So lots of movement in the Swiss banks, lots of strength, it looks like, happening in the USA. We're also looking at inflation, deflation, that's not as bad as it had been in China. So whatever's happening is working. It's creating more inflation everywhere except for PPI. And this could be, something that comes up. If producer costs go up, that could be oil might have to come up for that to happen. The other alarming thing that happened this week is manufacturing numbers in the USA were kind of the worst print that we've seen outside of 2020 when everything was shut down. This is the worst manufacturing index that we have seen this millennium. So I'm not sure what caused this, but it's huge. This is something that you should pay attention to. If you didn't know this happened, there's news about it here. This index was bad. Lowest level since pandemic. And prior to that, many years. I don't even know when the last one was. I don't even have the data. So I would have to search more for it. So the markets did survive all of these things, but there were dips. So I'm expecting this to be a leading indicator, and I'm thinking bearish on the SPX, especially since we're close to all-time highs. I think we bust some, fresher highs in maybe the Dow or the NASDAQ or whatever you want to trade. But I think U.S. markets are destined for a little bit of a price correction. Hard to say how big that's going to be. But I'm no longer bullish here, and I'm looking more for a bull trap than anything else. If we keep on moving down here, Chinese numbers came out solid, I think just as good as anybody expected. Inflation higher than expected in the UK. This could be also a product of the foreign asset sell-off that seems to be happening from the Swiss franc and the Swiss central banks. They had, they came out. The Swiss central bank came out this week to talk about how they don't have the tools to handle climate change, which is interesting that they're talking about the weather when they're having a hard time with inflation, deflation right now. Maybe they should focus on their job. Might be why they're having a hard time with the weather, because they're not actually doing a great job maintaining the 2% inflation target in Switzerland. So, it's an interesting world that we live in these days. Australia, employment change, these numbers look bad. So I'm going to be bearish on the Australian dollar and really some commodity currencies in general. And outside of that, maybe I might be a little bit more bullish on the CAD than something like the Australian dollar. But so Aussie CAD might be a fun one to look at. I think the dollar Swiss is a great place to go. Gold, silver, oil are going to be my other favorite places to go. But let's go ahead and get over to the charts. Let's do that. Let's talk some trading ideas, get this thing opened up for you. And this is Bitcoin that we have up, so we might as well talk about it. Bitcoin ETF just got released, and this is the biggest evening star, I should say, that I've seen form in quite some time. So do I think the 382 happens? Yes. I think 37,000 is coming, and that's where I will be aiming. Doesn't mean that it goes straight there. Very likely could be a painful fall there. I'm not going to look to be a buyer until we get into this green area below. Okay, so Bitcoin should be fun for quite some time, depending on what side of the fence you are. I'm just a trader, with the Bitcoin. I'm not necessarily, a Kathy Wood Bitcoin to 1.5 million type of guy. Let's go to the US dollar Swiss, because I think that if that happens, the US government's probably going to step in and keep it from happening. Let's clear this stuff out so I can do this with you. We can do this together. Let's come to the month. Just work our way. Okay, so what we're looking at here, downtrend for a real long time, and we'll draw them all. Let's just do it. This was our uptrend that happened. Okay, this was a thing, and then it broke out south, and then this became the trend. Okay, this became the trend for a long time. Lots of failed recoveries that happened. Okay, this is a downtrend, very clearly. And this seems to be another failed recovery that's happening, and it's just really can't stop, don't wanna. But we've been sideways. So I'm gonna go ahead and change my strategy from trend to sideways. And I want the current zone that we're living in, because that's what matters to me the most. And I want to come down to a lower time frame. Let's come down to the week. I want to get a little more zoomed in than I am. And we're up the last 3 weeks in a row, and very up this week. Okay, so I don't think that there's a reason why the Fed is going to support the current presidential administration, with, low rates and, high stock market in November when everybody votes. I just don't see that being the case. I think that they make it a little bit more difficult of a year, because I think that this current administration is on the way out one way or another. It's either going to be, Donald Trump or Gavin Newsom or Michelle Obama or whoever is going to be president. But I don't see it being Joe Biden. So what that means to me is that the Fed can maintain high rates and be mean to the consumer and make dollars expensive. So if that's the case, and I also know that there's a big price inefficiency above here. I'm going to draw this for you guys. I drew it for myself earlier when nobody was around, but you guys get to see where it comes from. That's a big fall that happened from up near parity, okay? And hundreds of pips, that's a big area to fall. Well, let's just say there might be people that forgot to sell there that are still holding, that want to get out at that price, and we're in the low 80s, okay? So those occurred at lower prices also. So let's zoom in more. Let's come down to the day, okay? So even if you're not confident we can get all the way up to my box above there, there's another one of those so-called price efficiencies that happened at around 90 cents, a full 1,000 pips closer. Okay, so this is another area that I'm interested in trading back towards. Do we get straight up there? The question is maybe, maybe not. There's nothing that really moves straight up, but we do look like we are in territory where we might start taking a little bit of a break. There is a fantastic opportunity in my mind to be looking for lows to buy here for, well, the foreseeable future. So that's what I will be doing on this particular currency cross. And since I'm doing that here, I'm going to go over to gold, another, well, very related symbol to the one that I just showed, the dollar Swiss. And looking at gold, there's a very obvious move. I think that from a technical standpoint, you guys will see immediate. Let's clear all this stuff out. And gold's lived in a couple different zones throughout my lifetime, and really the lifetime of the bank. And it's, historically it's up. This is the financial crisis that happened here. This was an area where a bullish crown formed. Obviously we printed, 800 billion or how much ever money we printed. And then gold went all the way up here. Okay. And this became the new all-time high on gold. And we came back to test our old range. We didn't quite make it into that range, but either way, this was the range. Okay. And that formed, and here we are. We're at current time. Okay, so we've broken out of this range. We have new all-time highs that have happened, and we've, really struggled to get out of here. So do I think gold is gearing up for much higher prices? I think so. Okay, I think so. But in the near term, let's come down to the week. Okay, so those of you that are traders like myself, you might notice another one of these fun price inefficiencies down here. And let's make let's go down to the day. Let's get all the way down to the day. So what we're looking at here is a rollover happening on gold. We're also talking about a lot of reasons why the dollar might be strong. So this is an opportunity, I think, for us to come back and test 2000, maybe even lower prices down towards the 1900s. I think there is a great opportunity to start becoming a buyer at those levels. But right now we are getting lower and lower highs, and we're getting a lower high right now on the right side of this counter trend line that I just drew here. So I think big opportunity to short gold. And if I feel this way about gold, I might go over here and look at silver real quick, and let's share with the class. You know, if you're going to bring snacks to class, you got to bring enough for everybody. Man, I miss being in third grade. There was so much less to worry about. Now we got all this geopolitics to cloud our minds. None of it's real. I'm just playing around. It's all real. But this is our current wedge that's forming. Okay, and this is our supply and demand lines, whatever you want to call these. You know, this is our area that we live in. Okay, so that's what I want to define. I just want to whittle down the world. Right now, you know, there's a ton of paper silver, and that's the only reason why this thing doesn't go to a cajillion, because it really doesn't make sense. But the rules for paper silver are very, in my opinion, they're just not fair. I don't know how else to put it. But we're sideways at this price where our supply and demand lines meet for quite some time. And I think we are doomed to be in this zone until we're not, at least, which is fun to say stuff like that because I didn't say anything. But either way, I think $17 is just as likely as 30. And it's going to take something happening, or some happening of some kind, you know, some swan event, whatever you want to call it, for silver to break out. I think as long as the situation with how ETFs work on silver, I think this works its way down. And I think we, you know, trade sideways in our current zone here, because we've been sideways for a while. I think everybody would agree here. This is our most recent zone right here. Okay. And I don't think anybody wants to believe it. I don't, but $18 is possible. And if I'm going to combine these strategies, well, this trend line is really where I might be, I might be headed. And if I come down to a lower time frame, it's a little bit more apparent. I think from a Fibonacci standpoint, what I want to aim at is really going to be somewhere around this 20.5 price, 20.5. Okay, so anywhere lower than that, I'm probably going to be a buyer, at least short term. But for the time being, I've got, you know, maybe as big as a 10% move downward. So I'm going to be looking at that one. Let's look at gold, or oil, excuse me. Oil is probably the most contested thing in the history of trading. But, you know, let's zoom out here and let's talk about oil. Let's go to the month. And let's get on this thing. You know, obviously everybody knows big issues happening in the Suez Canal right now because the Houthis are attacking ships in the Red Sea. We're at war or not at war, doesn't matter what your opinion is. Ships are going around Africa an extra 5,000 miles instead of cutting from, say, directly from India through the Suez to Europe, or from China through the Suez to Europe, the UK. They're going to, you know, go all the way around Africa. So that means they've got to use a heck of a lot more oil to get their ship 5,000 extra miles. So that's a big deal. And really that's inflationary for a lot more reasons than just the one I named, but that is the most direct one I can think of. Okay, so in looking at this, you know, we also are expecting strength from the dollar. Okay, so do I think this thing can go to 1 million? The answer is no. Okay, so do I think it can go sideways if they're both strong? The answer is a resounding yes. Okay, so if they're both strong, we're getting higher and higher lows here. This is a confirmed low where I was trained to trade. I'm going to go ahead and draw this trend line here. This could be the beginning of our sideways move that's happening right now. Let's go down to the day. And that does look very close to our move that we've been waiting for. Okay, so I'm going to be long here and for the considerable future. I think all the way up to $80. And if you don't like it, you can get out. I think a nice price inefficiency there. That's really going to be, I think, one of the bigger opportunities in commodities to happen. Really, I think just the writing's on the wall here. We're getting higher and higher highs and lows here. So should be fun. I'm going to be on this one. There's a ton of opportunity in the world right now. If you haven't noticed, if you haven't already liked, subscribed, and rung that bell so you can get these up to date, then do it. Go to our website. If you haven't, got into, your own prop trading account, this is an opportunity, people. Okay. So if you're okay trading small in a 5 to 6 figure account, then go to the website, get this 20% off coupon I'm offering you right now. But otherwise, enjoy the rest of your day. It's Friday. The sun's finally out here in Florida. You guys be good or be good at it. Again, I'm Will Bridges from your team at THF. Take care.